All right, MillerKnoll just dropped their latest earnings, and wow, the stock is on the move after hours. So what's all the fuss about? In this breakdown, we're going to dig into exactly what's fueling that pop. We'll look at the headline numbers, sure, but the real story, it's hidden in their order book. Let's dive right in.
Okay, here's how we're going to tackle this. We'll start with the market's knee-jerk reaction, the result. Then we'll get into the numbers themselves. After that, we'll hit the real story, the order book. We'll also cover what management is planning to do next, and then we'll wrap it all up with our own take, including our forecast for the next quarter. And of course, we'll finish with a quick disclaimer.
All right, first up, the result and reaction. When it comes to earnings, the market gives you instant feedback. The price action tells the first part of the story. So what was the market's verdict on MillerKnoll's quarter?
Well, it sent a very clear signal. The stock popped more than 8% in after-hours trading. That's a huge, decisive move up. So the big question is why? The rest of our time here is all about breaking down exactly what got investors so excited.
Okay, let's get right to it. Time to look at the headline numbers that drove that reaction. We're going to see what Wall Street was expecting versus what MillerKnoll actually delivered.
So if you just look at the surface, it was, a solid quarter. Not a massive blowout, but good. They beat revenue expectations by about $11 million, and their adjusted EPS came in a penny higher than consensus. And look, those are good numbers, for sure. But are they an 8% pop good? Not really. To understand that big move, we've got to dig a little deeper.
And right here, this is where we get to the heart of it. This is the real story, the reason for all the bullishness. It's not about the sales they just reported. It's all about the business that's coming down the pike.
Check this out, because this is the divergence that has traders so excited. On one side, you've got reported sales. That's a look in the rearview mirror, right? And they were actually down about 1.6%. But then you look at the other side, at new orders. This is the forward-looking number, and bam, up 5.5%. This is absolutely the key. The market is basically saying, we don't care about last quarter's sales. We're pricing in the growth that these new orders are telling us is coming. And what's really great to see is that this isn't just one part of the business carrying all the weight. Nope. Management made it super clear on the call, this order growth was broad-based. We're talking solid momentum in global retail, in their North American contract business, and their international contract business. That's a sign of really healthy, diversified demand. So, demand is obviously picking up steam. The big question is, what's management's plan to capitalize on it? Let's take a look at their playbook. They're really hitting this from 3 different angles. First up, they're going on offense with their retail footprint, planning to open somewhere between 14 and 16 new stores this fiscal year alone. That's pretty aggressive. Second, they're being super disciplined on the cost side. They're fighting off tariff impacts and aiming to save about $10 million a year just by consolidating one facility in Michigan. And third, and this is a big one, they are riding a major tailwind in their contract business. And that tailwind? It's the whole return to office thing. The CEO, Andi Owen, was really clear about this on the call. She said, and I'm quoting here, that the return to office is really taking off. And it makes sense, right? Companies want people back, so they're spending money to upgrade their workspaces, and MillerKnoll is winning a lot of that business. That's a huge reason we saw that nearly 5% order growth in their North American contract segment.
Okay, so that's the story of the last quarter. Now it's time for our take. We're going to share our own analysis on what we think happens next, and of course, give you our official rating on the stock right now.
So for the next quarter, management's official guidance for sales is somewhere between $923 and $963 million. But honestly, with the kind of order momentum we're seeing, we think that's a little conservative. All those new orders have to turn into sales, right? So we're forecasting just a hair above their range at $965 million. And same story for earnings. Their guidance is 42 to 48 cents. We're calling for 49 cents.
So you put it all together, you've got demand picking up speed, a clear strategy from management. For us, the rating is simple. It's an outperform. We think there's definitely more room for this stock to run.
So if you agree with this view, how might you play it? Well, here's a wild but plausible trade idea for you. The straightforward action is to be long the stock, MLKN, with a price target of $24. The rationale is pretty clear. We expect those strong orders to translate into strong sales and better margins. But here's a little kicker for the more advanced folks out there. Implied volatility is always jacked up right after earnings, so you could consider selling some out-of-the-money puts to help fund the position. Basically, you're getting paid to agree to buy the stock at a lower price, which helps bring down your overall cost basis.
And before we wrap this up, just the usual, but very important disclaimer.
Just a reminder, this is all for informational purposes. This is not financial advice.